Hey traders, John Fortune here with this week's Weekly Forex Forecast for the 16th of September to the 20th of September 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also in the weeks ahead. So I hope you're enjoying your weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted the fact we were neutral on the dollar index. We are still overall in an uptrend. We are overall in the bigger picture making high highs and high lows. And we traded into a key area of resistance at the 98.86. We highlighted this in previous videos as the start of the 2017 bear market. This is why this is an important level. And as you can see, since we traded into this, we've really just been moving sideways and we're still stuck in this range between the 98.45 and the 97.44. Because we were looking at this from a neutral standpoint last week, you can see we really didn't expect anything strong one way or the other from the dollar last week. And in fact, we saw last week the pound dollar, for example, move into the upside, and also the US dollar yen move into the upside. So we had a weaker dollar against the pound, but we had a stronger dollar against the yen. Now, this is what generally happens when we have sideways markets in the dollar index, or if we have neutral or choppy markets. We can expect some currencies to appreciate against the dollar, while other currencies depreciating against the dollar. And we're looking at this being likely again next week, as we still don't have any serious resolution to the dollar index correction. We've just been chopping up and down, and we've just been getting a little bit choppy and volatile here. So very simply put, although we still are overall looking for this decline down towards the 97.44, we are going to once again go into next week with a neutral bias on the dollar index. And this means we're going to be trading the individual charts on their own merits, on their own structure and setups, without a strong bias in the dollar one way or the other. So next market we're going to look at is crude oil. Now, we have to look at crude oil in a unique way this week because of two things. One, we've been moving sideways in crude oil, not really going anywhere, no directional moves in oil now for a number of weeks. We're currently stuck between the range of the 57.190 and the 54.76. We tested the bottom of this range last week and we sit currently at the bottom of the range of the 54.76. And the second thing we have to consider in the oil market going into next week is we have had news this morning of attacks on Saudi Arabian oil fields and facilities, and this is likely to have next week a supply side effect on the price of oil, even the West Texas oil. And this means that I wouldn't be surprised to see a gap to the upside or some kind of move to the upside, as there is now less of a supply of oil pushing the price up. The extent of these attacks are yet unknown, and we may hear more news next week, and this may filter into oil next week. So it makes it slightly difficult to play going into next week. What we would like to see because of these two factors next week in this market, if we can get a break or even a gap above the top of the range of the 57.190, any pullback and a retest of broken resistance turning support, this would be a great place in crude oil to start to look for those bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, and we get this setup of a break and a pullback towards the 57.190, we're going to start looking at initiating longs up towards the next key area of resistance to the upside of the target set, the 60.61. So next market we're going to look at is euro dollar. Now, last week we were sitting in this area and we were looking for further declines to the downside. We came down and took out the target set from last week at 1.0951, and we bounced from this area and we broke back above this key area of resistance, and we start this week above the key area of broken resistance, looking to turn support at the 1.1030. So very simply put, next week, if we can get a pullback, and as always, if we can get a pullback and a retest of broken resistance turning support, this is going to be a great place to start to look for those bullish formations and patterns. And if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set, the 1.1162, and if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2, the 1.1199. Now, just something to note, these targets are quite close together next week. There isn't going to be much room to trade in between them, so we would just be looking at these as a more conservative target next week of 1.1162, or a more aggressive target depending on your risk appetite at the 1.1199 next week. So next market we're going to look at is pound dollar. Now, last week we were looking further advances to the upside in pound dollar. We did correct last week in pound dollar before taking out the target set last week at the 1.2373. We are still once again looking for further advances to the upside this week in pound dollar. If we can get a pullback And if we can get a pullback, preferably and retest broken resistance, turning support, as this would give us the best risk to reward at the 1.2355. This is going to be a great place to start to look once again for those bullish formations and patterns. And if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key resistance, the upside and the target set, at the 1.2661. So next market we're going to look at is US dollar Japanese yen. Now last week, despite the fact we were looking for, say, pound dollar to the upside, we were also looking for US dollar yen to the upside. And some people say, how can you look for pound dollar to the upside and US dollar yen to the upside? Well, if the dollar itself is neutral, you can see some currencies stronger than the dollar and other currencies weaker. And this is why we look initially to assess the strength of the dollar index. So it gives us a gauge of what we should be looking for overall. And again, we are trading these markets on their own merits this week. Last week, we did have further advances to the upside, taking out the target set at the 107.69 in the US dollar Japanese yen last week. So very simply put, we're still looking further advances to the upside in the US dollar yen next week. If we can get a pullback, and preferably as we need some risk to reward because we're coming up very close to the next target. So if we can get a pullback, and preferably if we can come back and retest broken resistance, turning support at the 107.24, this is going to be a great chance to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key resistance, the upside and the target set, with the 108.37. And if we can get a breakthrough here, we're going to be looking up towards the next key resistance, the upside and target 2, with the 109.31. So next market we're going to look at is Aussie dollar. Now, last week we highlighted the 0.6903. We were looking further advances to the upside in Aussie dollar. We came very close to taking out this target last week. What we would like to see, as this is still the target we're looking for in the Aussie US dollar, we'd like to see going into this week if we can start to get a pullback in the Aussie dollar. As always, preferably if we can come back and retest broken resistance, turning support at 0.6788. This will give us a great chance to start to look for those risk to reward setups, looking for further advances to the upside, looking to initiate longs up towards the next key resistance, the upside and the target set, the 0.6903. But if we start to break through, the second thing we'll be looking for next week, if we start to get a break above the key resistance at 0.6903, any pullback and a retest of broken resistance, turning support, this will once again give us an opportunity to start to look for those bullish setups. And we're going to be looking at initiating longs up towards the next key resistance to the upside and target 2, the 0.6996. So next market we're going to look at is New Zealand dollar. Now last week we were looking further declines to the downside, and we did actually have a sell-off in the New Zealand dollar last week. We had a negative week and we did have moves to the downside in New Zealand dollar, but we didn't really go anywhere. We pretty much started the week in this area and we finished the week down here. So although it was a negative week, we pretty much just moved sideways for most of it with a small sell-off at the end. Going into next week, we are still overall in a downtrend, but we are now correcting and we are in an area where we could start to range in the New Zealand dollar. As long as we're above the 0.6365, we're going to only be looking for further advances to the upside. If we can get a retest of broken resistance, turning support at 0.6365, this is going to be an area we can start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key resistance to the upside in the range top at 0.6508. Just bear in mind, unlike some of the other currencies we've looked at, if you are looking at longs next week in the New Zealand dollar, this is actually overall a counter trend move. So it may be slightly more risky than some of the other markets we've looked at so far. It'll be entirely up to you guys to decide whether you want to trade counter to the overall trend, or if you want to skip this market overall, wait for us to get back down below the 0.6365 and then once again start to look for those short opportunities. Entirely up to you. But as we go into next week, we're going to be playing this on its structure, and if we get those bullish formations and patterns, we will be looking at possible longs up towards the range top at 0.6508. So next market we're going to look at is US dollar Swiss franc. Now in previous videos we highlighted the 0.98150 for you guys to start to look for a bounce to the upside. We did pull back and test this area before bouncing to the upside towards the target of the 0.9975. We haven't reached it and we're starting to climb back into this area. Any pullback in this area we're only going to be viewing as an opportunity to look for bullish formations and patterns. So anybody not involved in this market from a couple of weeks ago, if we get another pullback and a retest of broken resistance, turning support once again at 0.98150, this will once again be a great place to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key of resistance to the upside and target set, the 0.9975. And if we can get a break through here, we're going to be looking up towards the next key of resistance to the upside and target 2, the 1.0000. Now again, because these are very close together, the way we'd just be looking at these is using the 0.9975 as a conservative target next week, and we'd be using the 1.0000 as a more aggressive target going into next week. So next market we're going to look at is US dollar CAD. Now, last week we were looking further declines to the downside. We were looking for a pullback towards the 1.32250. And we did get a pullback towards the 1.32250, but we did not bounce from this area. We went straight through it. This is where we start to look for those bearish formations and patterns. And you can see we didn't have any bearish formations and patterns here. We just traded straight through the area, the level we were looking at last week. And we started to make our way towards the 1.33190. Now, we're still only using this as a deeper correction. We're still only looking and still only interested in bearish setups in the US dollar CAD. So very simply put, going into next week, we're going to be looking at the 1.33190. If we can get a pullback and a retest of the 1.33190, this is going to be a great area next week, once again, to start to look for those bearish formations and patterns. And if we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 1.3110. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 1.3038. Last but not least, we have gold. Now, last week we broke down below a key area of support in gold, and we start the week below a key area of broken support, already turning resistance at the 1510.370. Going into this week, if we can get any pullback in this area, and preferably again if we can come back and retest broken support turning resistance at the 1510.37, this is going to be a great place to start to look for those bearish setups. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set with a 1449.67. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thanks to everyone who does that on a regular basis, and a big thanks to everyone who has subscribed to the channel so far. I want to wish you all a fantastic weekend once again, and I want to wish you all a very profitable trading week next week. The only thing left for me to say, guys, is take care and don't forget to trade safely.